the running estimate of how much liquidity was added to the system since September? Are we talking Shanghai Accord numbers? And if so, what impact would this have on risk assets for the remainder of 2019?
Look, you missed me with that question, but I'll try to answer it in like a reasonably robust framework. The number one thing, in terms of China specifically, you could sort of track, and we do, and I've learned to sort of not pay attention to some of them, a myriad of estimates. If you look at PBOC, open market operations, you look at medium-term lending schemes, you look at where RRR is, what the pending RRR is, because they tend to do it on lags now, in terms of how much liquidity is being unleashed into the banking sector. All this stuff matters in terms of generating the narrative that Bloomberg and Wall Street Journal and the Financial Times and everyone else on Twitter is trying to sell you. What really matters, particularly in China, I'm isolating China as an example, is a year-over-year rate of change of credit growth. So ostensibly, if they're easing policy and pumping liquidity into the system, it's got to find its way into the real economy somehow. If the policy transmission mechanism is dead, then we wind up like Japan and there is no growth. So I think that's kind of the key takeaway. And what we saw and really all throughout the second half of 2018 and really into the early part of 19 is that for 6 to 9 months, China was doing the PBOC was pumping liquidity, cutting taxes, all this stuff, and you didn't see any response in the data, or more importantly, the number one thing that really matters is credit growth. Shadow financing was tracking down 10% year over year. Credit growth, and I apologize, this slide's not in this particular deck, but credit growth was basically a debt person at about 13.5%. And then finally in March, it's like pop, oh hey, 14. It's like finally you get that response, and it obviously coincided with a lot of what we saw in terms of that was in March rather, with the uptick in economic activity across all the high frequency data in March as well. So, when I talk about liquidity, it's like, okay, what are we even talking about here? With respect to the Fed, I mean, quad 4 is quad 4. You expect the Federal Reserve to supply liquidity, and obviously we've seen interest rate expectations, in terms of what's priced into the forward expectations go from a hike to a cut, in really short order, and actually kind of stay down there despite improving financial conditions, despite improving financial markets, and obviously including the stick save by Mr. Kudlow and his cronies, improving economy, at least for 1 quarter in Q1.
Want more Hedgeye? Subscribe to Hedgeye Risk Manager, the holy grail of risk management investing tools. This deluxe suite of investing products includes ETF Pro, Investing Ideas, Market Edges, The Macro Show, Early Look, Risk Ranges, Real-Time Alerts, Plus, Macro Select, and our quarterly investment outlook. Try Hedgeye Risk Manager today. Now for the low price of $24.99 a year.